A shorter week like Thanksgiving week shouldn't have even had 10 events and have a top 10 events. It should be maybe top 5, maybe top 6. But after this video, you will see that this week, although it was shorter than usual, it had so much news in it. So welcome everyone. My name is Micha, and on this channel, which is called Stock Talk with Micha Stocks, we talk about the markets, we talk about the news, we talk about charts, indices, averages, everything to grow our understanding of what goes on in the stock market. If you're new to the channel, it would be great if you can subscribe to the channel, and also if you're a returning viewer, it's amazing to click the like button if you enjoy this content, and by that exposing the channel, which is the new channel, to more and more people. Let's dive in. Let's start summarizing the week. Before we start with the top 10, we usually start with the major averages. This is how they look this week. The Dow Jones ended the week plus 2%. The S&P 500 of the biggest stocks in the world plus 1.6%. The NASDAQ, which is heavy on tech, ended plus 0.3%. And the Russell includes the smaller caps plus 0.5%. And if we go to the crypto market, which starts to, let's say, stabilize it after the FTX colossal that we keep following, and don't worry, we're going to talk about that. Bitcoin is up 4.7%, and ETH, which is Ethereum, is up 9.48%. When we look at the heat map, this is how the heat map looks like for the S&P 500. You can see that most stocks on the S&P 500, over 50%, are ended green this week, but we can see very clearly Amazon, Adobe, Netflix, Google, Apple, and of course Tesla and Intel on the red. We'll talk about them on our top 10. Don't worry, at least some of them. When we look at the most popular stocks from viewers, this is the list. We have Nvidia that ended on a 5-day stretch plus 3.78%. Then Microsoft, Enphase, and when we go all the way back, we see SoFi ending the week at minus 14.5% with a fear of SoFi's exposure to crypto and to FTX. Then PayPal, NEO, which is a Chinese EV company, Netflix, RK, Shopify, Apple, and Amazon. And when we look at the indices, one thing that stands out, and we're going to talk about in the top 10, is the Dow Jones major average, which is now year to date, bit shy. It depends how you measure the 5 days, between 4.3 to 6% minus from the beginning of the year, which is amazing. On a bear market year, the Dow Jones is performing a lot better. Are you ready for the top 10? Here are the 10 biggest events this week, starting from number 10. And it happened during the weekend. A week ago, Bob Chapek out, Bob Iger back in. Yes, this duo keeps changing seats. If you all remember, beginning of COVID, Bob Iger steps down as the CEO and the legend of Disney, ticker DIS. And Bob Chapek was named the successor. And 2 years later, we are at the same point where Bob Iger steps in instead of Bob Chapek. During that weekend, the story says that Bob Iger, around Friday or Saturday, gets a phone call from the board of Disney saying, "We need you back." And that is due to the poor results that Bob Chapek brought in. That is due to some of the decisions that he took, which were not aligned with the board and was not aligned with the values of Disney, and that sent Bob Chapek home and brought in Bob Iger. And you can see why the board was so eager to bring in Bob Iger. Look at the growth of their stock, and this is from Bespoke's Twitter account. You can see the growth since Bob Iger was CEO in 2005 all the way to 2020, from a stock around $25 to $30 per share. Brought it all the way up to 150, and then Bob Chapek brings it all the way down. Part of the pressure that came from the board is, of course, the performance. And when you look from a financial perspective, you can compare, and I want to thank here App Economy Insights for providing these on their Twitter accounts. You can see that the Disney Q3 revenue ended at $21.5 billion, which is a 26% increase year over year. And when you go one quarter ahead and you see Q4, revenue going down to 20.1, which shows a very slow growth year over year. You can see the different segments here on how they make money and how they spend the money. But it's very clear that Disney's growth is behind it, and also their expenses on the media and on the direct-to-consumer, which is the Disney Plus, the ESPN Plus, the Hulu, and debt that they had to serve it became almost impossible. And that brought to the 10th event of the week. By that, we go to number 9. And on our number 9 slot, we have Elon Musk tweeting, which is rare these days, tweeting about Tesla, ticker TSLA. This came about November 24th, where Elon Musk says Tesla full self-driving beta is now available to anyone in North America who requests it from the car screen, assuming you have bought this option. This is very, very dramatic for Tesla shareholders and, of course, for Tesla drivers, because if you're subscribed to full self-driving, whether you're paying a monthly subscription or you paid it when you got the car, now the car can drive itself from one point to the other in the city, outside the city, on the highways, and also local. Yeah, there are a lot of there are still bugs, not a lot, but there are still bugs, and it's for someone that drives with full self-driving beta, I can tell you, it's very frightening. But from a business perspective, from an investment perspective, Gary Black summarizes the value that this tweet, or actually the ability for everyone to download full self-driving, means for the financials of Tesla. That's about a $1 billion of revenue recognition that can be recognized in Q4, which is this quarter. And it goes directly to the bottom line because they got the revenue already, and now it's revenue recognition. And of course, it will improve the earnings per share, but people will take it out. Analysts will take it out. There's a lot of playing around with this number, but this is a huge milestone for Tesla investors and, of course, for Tesla, the company. And a few hours ago, from 26th of November, Elon Musk again tweets about Tesla. And the reason why I'm mentioning that is because most of his time right now is tweeting about Twitter. And when finally he talks about Tesla, it's great news. He says most of the people still have no idea, but full self-driving is the most important software release of any kind for a very long time. And the reason that he says that is because Elon Musk and the Tesla team really believe that they have almost captured the ability for a car in this case to drive itself, and for the engine, the AI engine in the car, to take decisions just like a human being. Is he right? Is he wrong? The stock, this is how it looked like during the week. So in the last 5 weeks, Tesla stock is still down 1.2%. You can see that from the announcement. Tesla stock goes up from 168 all the way to 185. There are a lot of reasons that might be. Not only that, there was an upgrade that was made from sell to hold from a Citi analyst. There's also the FSD information. And of course, the stock was very oversold. Will the stock keep going up? We'll see it. Might be the next top 2 or 3 in the week ahead. Let's go to number 8. And number 8, we have Activision Blizzard and Microsoft. The deal hits another hurdle after European regulators or antitrust committees do not really want to approve this deal. Now it comes from the US, and Biden FTC blocked similar deals in the past. And anyone that hears this doesn't even know what I'm talking about. So beginning of this year, Microsoft agreed to acquire Activision Blizzard with a deal size that is supposed to be $68.7 billion or $95 per share of Activision Blizzard. This deal might not be approved, and if it's not approved, then Activision Blizzard's value goes down, and Microsoft value will probably, or at least the stock price will go up because it was discounted the fact that they're going to pay that much. When you look at that news over their charts, you can see the blue line is Activision Blizzard. From the moment that the news came about, Activision Blizzard stock went down from the value of 96 all the way down to 73. Sorry, not 96, 76 to 73. And Microsoft actually kept on going up. And the reason for that is because they already got the discount on their stock. One person that should be very worried about, or actually one stock that should be very worried about, is Warren Buffett and Berkshire Hathaway. If you remember the story, a few weeks before early this year, before the merger or acquisition was announced, Warren Buffett, and it's not Warren himself, but Berkshire Hathaway decided to acquire 9.5% of Activision Blizzard, which was a an acquisition that wasn't clear. It's not in their it's not really a company that fits their portfolio. It doesn't align with any of their values, but they decided to acquire it probably because they had some kind of understanding, and I'm not saying anything about that, but they wanted to get an arbitrage bet. Well, that arbitrage bet is probably not gonna come to fulfillment. Let's talk about number 7. And today, number 7 is going to be the week that passed earnings. And the reason why I'm showing you these earnings, not because of most of the companies, but because of one company that excelled this week after they reported their earnings. And it's none other than John Deere. Yes, John Deere, the tractor company. You're right, John Deere. Year to date, the stock is up 26%. In the last 5 days, the stock is up 7.2%. And you're probably asking yourself, scratching your head and saying, John Deere? Yes, John Deere. And thanks for Charter, the website that charts things in an easy to understand way. You can see John Deere's annual revenue going up from the 1990s, underneath 10 billion. Only 1995, they got to 10 billion, and now they're over 50 billion of annual revenue. You can see the split between the different segments. Agriculture and turf equipment is $35.4 billion. Then construction and forestry, which is 12.5. Financial products, 3.6. And other, which is a very small fraction, $1 billion. So believe it or not, John Deere, yeah, John Deere, the one that every kid plays around with, is number 7. And the reason for that is because, again, they reported very good earnings. They upgraded their forecast. And what can you say of a stock that went up year to date 26%? Let's go to number 6. And on the number 6 today, we have our previous number 1, FTX. And the reason why it went down, not because there weren't a lot of news, just because there were better news, but number 6 is FTX. FTX and the whole scandal, everything that goes on, provides us with so much news. I'll try to emphasize only the things that are important. So this week, the hearing started in the Delaware courts for the bankruptcy and also for the alleged fraud and alleged Ponzi scheme. The lawyers say it's a different sort of animal. They have never seen such a thing. This is Sam Bankman-Fried, which is now in the Bahamas, with a whole real estate that he bought there from the money of FTX. And he keeps on tweeting. And a few days ago, November 23rd, he says, yes, I will be speaking with Andrew Sorkin from CNBC at the Deal Box, which is a New York Times event on Wednesday, 30 of November. Who else is attending? You can see the mayor of New York. You can see the CEO of TikTok, the chairman and CEO of BlackRock, the founder and CEO of Netflix, president and CEO of Amazon. You can see the CNN host, author, and founder of DreamOrg. You can see the president and CEO of New York Times. You can see the prime minister of Israel, which is written here as former, but he's actually right now the prime minister because of the new elections. Mike Pence, the VP, the 48th vice president. You can see, I skipped Scarlett Lewis, sorry, the founder of Jesse Lewis Choose Love movement. Priscilla Sims Brown, which is the president and CEO of Amalgamated Bank. Probably I mispronounce it. Janet Yellen from the Treasury, the U.S. Deputy of Treasury. President Zelensky, Mark Zuckerberg, which probably you don't need me to explain what he does, and FLS Plus. And the whole scandal is, why is Sam Bankman-Fried, which allegedly or not allegedly, is even in this conference? Andrew Sorkin got hundreds, if not thousands of questions. Are you really going to talk to him? Are you really going to interview him? And he answers this. He says, look, a lot of folks have been asking if I would still be interviewing. And the answer is, yes, of course. I'm going to ask him everything that I want to. So that's how crazy things are. But you want to hear how things are even crazier than that? Let me introduce you to Terry Duffy. This is Terry Duffy on the left. Terry Duffy is the CEO of CME Group. Terry Duffy, 6 months ago, sat in a congressional hearing that took place around changing some of the abilities of commodity trading and leverage, meaning that they would need a lot less collateral in order to leverage trading. Why am I mentioning that? Because listen to what Terry Duffy had to say on Melissa Lee's Fast Money show on Wednesday.
Allegations of what he wants to do. So I met him, as you said, when I gave Guy and Dan the podcast the other day. But what is really interesting is how this whole thing came about, which kind of got my interest up about he is a fraud. And I met earlier in the day.
When was the last time that you've ever heard a CME CEO or any CEO talking about someone else calling them a fraud? And the reason for that is very clear. He sat on the congressional hearing and he's sitting there and he's hearing all these things and he's hearing 6 or 8 Congress men or women trying to push a change that doesn't make sense. Allegedly. Everything is allegedly. And people that don't know CME Group is leading the derivative marketplace. They help big organization, hedge funds, and other financial institutes to trade commodities, to trade derivatives, to trade futures, and also crypto. I've never heard someone on live TV calling someone else a fraud in the way that he did. And actually he did it in the congressional hearing as well, so it's not really new. And that, no doubt, takes the spot of number 6. That brings us to number 5. Number 5 on our top 10 is China, which reports over 30,000 new daily COVID cases. The zero COVID policy is not working out. Chinese people are fed up with the fact that they're not vaccinated, with the fact that there's quarantines, with the fact that they can't do anything else. We're starting to hear CNBC reporters and others giving us all the information of what's going on in China. You can see the different clips going on Twitter of employees on Foxconn and other factories that do not want to stay anymore in the factory. They want to go back living their life. And yes, it has a lot of impact. For example, Foxconn, which is the number 1 producer for iPhone 14, there is, let's call it a rumor at this point because we don't know for sure. There is a reporting or a rumor that they're going to reduce by 30% their production of iPhone 14. We're going to talk about that when we talk about Apple. Will Apple be in the top 10? You got your hint. Probably it will. And yes, the Chinese people are fed up with everything that goes on with zero COVID. The big question is the Chinese government going to continue with the zero COVID, which means that we're going back to quarantine in China, which means that the ports would be closed, which means that the supply chain is going to be hurt again? Or they're going to understand that the path they took was the wrong path. They already have, legally or illegally, they have the mRNA ability to produce vaccinations. Will they vaccine their people? Won't they? We'll see that in the next few weeks. But China, no doubt, is in a big trouble right now. They're not growing. Their finances on the bad side, at least the personal finance. There is a big problem in China, and that is why it is number 5. This brings us to number 4. And number 4 is the biggest company in the world, Apple. Yes, during the week we have 2 items in the number 4 because number 4 is Apple. One of them is Apple is thinking of, or at least express their interest in buying Manchester United. I got a lot of requests saying, why would they buy Manchester United? Can you explain the logic? And actually, I can't. So what I did, I went again to App Economy Insight, to their Twitter accounts, and they shared how Manchester United makes money. You can see from the left-hand side, this is how they make money. This is in pounds, of course. And the revenue sums up to 583 million pounds, which is an increase of 18% year over year. But, and that's a big but, and everyone that owns a soccer or a football team knows soccer or football, depending on if you come from the European side of the ball or from the American side of the ball. But I'm talking about the round ball, which is this one, knows that owning a club is usually not something financial. And as you can see here, they're losing a lot more than they're making, or actually they're spending a lot more than they're making, which means they're losing money. Going back to the question, why does Apple want to buy Manchester United? The only reason I can see is Tim Cook wants to be Ted Lasso. That's the only reason. And if you don't know what I'm talking about, Ted Lasso, Just Google it. Now let's talk about Foxconn. Let's talk about what goes on in China. This is Sarah Eisen from CNBC talking to Eunice Yoon. These are the pictures that you see from outside Zhengzhou, which is the city, and I probably mispronounced it, the city where Foxconn is, where they produce the iPhone 14. This footage is not good for the Apple brand. This footage is not good for producing iPhones. And you can see more and more videos of Apple. And if number 5 was China, number 4 is Apple. And the impact of China on Apple is dramatic. And why is that? Because Foxconn produces most of the iPhone 14 and the 14 Pros, which is our more advanced iPhone. We are now in the holiday season. It's the time where Apple needs to sell as many iPhones as possible. iPhone is 50% of Apple's revenue. And if that production will go down by 30%, then Apple has a problem. Why is that a problem? Because it means that there will be major shortages. Why is that a problem for us in the stock market? Well, Apple is the biggest stock and the biggest has the biggest influence on the S&P 500. It holds 6.58% on the S&P and holds another 13.24% on the NASDAQ. If Apple stock is going to be impacted because of all of this, meaning that their financial results will be impacted due to less sales of iPhone, this brings the major indices down, major averages, down, and in this case also the major indices, which means more pressure on the market, which might be only in Apple news, but it's market news as well because other companies have production in China. So Apple is number 4. That brings us to number 3. And number 3 is no else than the Fed, the FOMC minutes. The FOMC minutes were released this week, the meeting that was held November 1st and 2nd. We have got the minutes. The minutes is the summary of the meeting. It's not a summary that someone writes during the meeting. It's a summary that encapsulates the idea. Everyone goes over it. It's being approved. That's why it's 2 weeks later. It's not something that is released as a summary the day of. The reason why I'm mentioning that is after you know all of this and you have the summary in front of you. By the way, you can go to the website and click on the PDF and then you have the minutes themselves. Then you go to the highlights and you see that Fed officials see smaller rate hikes coming soon. That gave the market a green light and a lot of optimism around the fact that we're getting close to around the 5% terminal rate, might be 5.25% terminal rate. And there would be the point where the Fed would stop the rate hikes, which means that the stock market can find some kind of bottom. Whether you believe that's going to happen or you don't believe that's going to happen, those are the meeting notes. That's the summary. And it did provide a lot of optimism after the minutes were presented. Number 2. Are you ready for number 2? Number 2 this week is no else than Black Friday. Yes, Black Friday is still on this week. I'm filming this video on November 26th, which means that Black Friday was yesterday. Black Friday online sales tops $9 billion, actually $9.12 billion. Overall, it's 2.3% year over year, which might be not that dramatic, but especially in a year like this, where there are layoffs and a recession looms and all that, this is very strong for the economy. Companies that enjoyed the credit, let's call it the credit need these days, are the buy now, pay later companies as Affirm, PayPal, Square, and of course Apple, which saw an increase of 78% the past week. More people are using credit, which is not good for the economy. But when you look at the retailers themselves, they were able to take a lot of the inventory that they had and sell it to their customers, which is good or bad, depending on which side you are on the equation. But if you're on the Amazon side, what happened in the last week is not good because the searches for Black Friday bargains, Walmart, I think for the first time in years, overtook Amazon, which means that people were more likely to look for bargains in Amazon and Walmart, and maybe even buy there versus Amazon, which did 2 Black Fridays, or actually Cyber Mondays or Prime Days or whatever they call them these days, and still wasn't able to attract the buyers. Very interesting. And to top it off, we have Shopify. A lot of small merchants use ticker SHOP, S-H-O-P, reports a $3.36 billion in Black Friday sales, which is up 17% from 2021. Again, very good for Shopify. Not so good for anyone that is calling to stop the rate hikes, because if the rate hikes are supposed to slow the economy, if the economy keeps buying more and more, then the Fed needs to keep raising rates. So every story here has two sides, and to tell you the truth, even if you got those results and you would need to bet to one side or the other, I'm not sure that you would be able to choose to which side, if the market will behave good to these news or bad to these news. Actually, write it down in the comments. What do you think? Is a good or strong Black Friday good for the market or bad for the market? Write it down in the comments. It would be interesting hearing from all of you. And now we get to number one, the winner of this week. It's not a company. It's not a stock, or actually you can buy it. It's the Dow Jones. I've never thought that number one would be a major average called the Dow Jones, which year to date is only down 6% in a year where most major averages are down 16 to 30%. And the reason why Dow Jones is the number one this week, because if we look at the 5 days, it had a very strong week. And if we look at the 1 month, the Dow Jones is up 7.88% in the last month. When we look at the Dow Jones, you can see that from October 1st all the way to when I'm filming this, 26th of November 2022, the Dow Jones average went up 19.88%. You're probably asking yourself, what are the stocks inside the Dow Jones? So this is a year-to-date view on the 30 stocks, only 30 stocks that compile the Dow Jones. We have Apple with the most weight, and then Microsoft and other. But you can see that if you take away the tech side of it, companies that are year-to-date, are positive year-to-date, are Johnson & Johnson, Merck, which is up 40% year-to-date, United Health, Amgen, which is up 26.8% year-to-date, Chevron, 56%, and Coca-Cola, Walmart, and others. So you can see there's a clear shift, or there was a clear shift during 2022 between the big tech to more of a defensive healthcare and, of course, energy stocks. And that is why the Dow Jones, which went up in the last 5 days another 2%, year to date only minus 6%, is the big winner of this week after it went up all the way from October 1st to the 26th of November, 20%. Yeah, 20% on a major average. It's not even a small stock, the Dow Jones. And that was the top 10 for this week. Are you ready for next week? What are we going to have on our plate next week? So we have Black Friday, or actually Cyber Monday. We're going to hear next week all the results. Who sold more? Who sold less? Was Cyber Monday better than Black Friday? Are we surprised, or are we not surprised from anything that happened? That's going to escort us during the week. We're going to get all the results, all the sales results on Black Friday and Cyber Monday. So that's one event that we're probably going to follow through this week. We have the New York Times, the Deal Book, which we talked about with Sam Bankman-Fried. We have different financial events. So we have on Wednesday, we have the PCE prices, we have pending homes. On Thursday, we have the ISM, and also we have the core PCE. We have continuous jobless claims. So we have a lot of macro events during the week. We have Jerome Powell speaking Tuesday or Wednesday, if I'm not mistaken. So we're going to also have that. And of course, we have companies that are reporting. So we have several companies. Some are Chinese, some are not Chinese. We have CrowdStrike, which stands out. We have Workday, we have HP, we have NetApp, we have, of course, Salesforce, ticker CRM, Snowflake, Okta, Splunk, and others. And on Thursday, we have Ulta Beauty, Dollar General, ChargePoint. You can see the list in front of you. It's going to be a crazy and amazing week, which starts December, which is going to be a very volatile, at least for my analysis, it's going to be a very volatile. We're entering December. Actually, we're starting the last week of November with the VIX, which is the volatility index, on a low count around 20, which usually means that there might be a change in direction going up when the volatility index goes up with all these different news outlets that we're expecting this week. It means that we're going to see a lot of volatility in the market all the way to the mid of December, where we'll have the CPI and the FOMC. So we have a date every week, every Sunday morning, where we summarize the week and we get prepared to the week ahead. If you liked what you saw, it would be great if you can like the channel, and then of course it would expose it to more and more people. If you can share it with your friends, that would be amazing as well. Till the next video, I'll see you next week. Bye-bye.